Hi, welcome to this edition of the Insurance Experts. I'm Mark Lickman, Actuary and Long-Term Care Expert. In today's episode, we'll be interviewing Scott Olson about the Long-Term Care Partnership Program Strategy. Before I get into that, I want to share with you some exciting news. We'll be releasing www.buddyins.com here real soon. You can sign up on the webpage if you want to help your clients get a long-term care plan. Also, stay tuned to the end of this episode. I'm going to share some behind-the-scenes footage of my recent visit to Madison, Wisconsin, to visit with National Guardian Life as we talked about some new long-term care insurance solutions. So with that, enjoy the episode, and we'll talk to you soon.
Hi, everyone, and welcome to this edition of the Insurance Experts. I'm really glad to have my friend Scott Olson on the line today. We know each other from LinkedIn as well as in real life at the ILTCI conferences. He wanted to share with us today a strategy for LTC Partnership. Scott, why don't you first of all introduce yourself and share with us your book that you wrote on the subject?
Sure, thanks, Mark. My name is Scott Olson. I've been specializing in long-term care insurance since 1995, so it's something I've been doing quite a while. I am a big advocate of the long-term care partnership programs. I think they're one of the best kept secrets in the insurance industry. Okay, and so that's one reason why I wrote the book. It's right here. I don't know if you can see it. There it is. Simple LTC solution: how to protect your life savings with a long-term care partnership program. So I wrote that last spring, and it's on Amazon, and a lot of people have been ordering it. It's been a good thing. So.
Yeah, I read it. I'll post a picture of me and my daughter reading your book from last year.
I remember that. Yeah.
So, Scott, why don't you tell us a little bit? I know you had a client recently where you utilized this strategy. Why don't you give us kind of a high-level overview of the client first of all?
Sure. Yeah. This is a client in North Carolina. Their name is Brian and Liz. They're a married couple in their late 50s. Both teachers, so they're not uber rich here. Okay, they've just been teachers their whole careers, and they've got 3 kids. One of them is autistic, and it's very important for them to protect what they have been able to squirrel away. It's very important for them to protect that for their kids, especially their autistic son, and so. They had heard about me through an article on AARP, and they got my book, and they read the book, and they were very intrigued by the long-term care partnership program as a way of guaranteeing that their retirement savings would be saved and protected for not just for each other, but for their kids as well.
So what did their financial situation look like? How much savings did they have?
Yeah, well, right, they've got a net worth of about $500,000. Okay, so like I said, they're not filthy rich. Okay, they are still working, so they're still contributing to their 403bs each year, and they'll probably have by the time they retire, probably close to $1 million worth of savings. Okay, in their retirement accounts, which is good. I mean, it's going to be hard to retire without that much, and but they wanted to make sure not only that they have enough to live on and that it's protected for each other should one of them need long-term care. They don't want to deplete their retirement savings for their kids.
So how does the LTC partnership strategy work? Can you give us a high-level overview?
Yeah, sure. Good question. Okay, the long-term care partnership programs, the way that they work is it answers the question of what is going to happen if my long-term care policy runs out of benefits. Okay. What happens then? All right. So the government created these programs, and they're right now available in 44 states. They created them to incentivize people to buy as much long-term care insurance as they want to protect in assets. Because the way the programs work is for every dollar that your policy pays in benefits, you can protect $1 from Medicaid, right? So I guess you can't really understand how good the program is if you don't understand Medicaid, all right? But Medicaid is the biggest payer of long-term care. But Medicaid only pays for your long-term care if you've spent your savings down to about $3,000, okay? So, that's not good, okay? Nobody wants to have to spend their savings down. But the way that the partnership program is written is it changes the Medicaid rules, Okay, so now someone can qualify for Medicaid long-term care and still keep their assets. So, and so, for example, if their policy paid out $500,000 worth of benefits, well, then they could keep $500,000 of savings and still qualify for Medicaid long-term care.
So how much does this LTC partnership program cost?
Great question. And it varies primarily depending upon how old someone is when they buy it, okay, and how healthy they are. So the younger you are and the healthier you are, the lower the premium is going to be. Now, for most people buy long-term care insurance, the average age is about 58, 59 years old. So, for somebody in their late 50s, if they're single, they could get a good policy for maybe as much as $200 per month. If they're a couple, might be looking at over $300 per month. But the key is that the less you have in savings, the less benefits you need to buy. So it's an affordable solution for everybody. The more you want to protect, the higher your premium is going to be because you'd be buying more benefit. The less you have in savings, the less you'll need to protect. So you don't need to buy as much long-term care insurance, and that makes your premium that much cheaper.
So that's the cost of the long-term care insurance. Is there any cost for the partnership protection component of it?
Great question. And no, there's no cost for the partnership protection. The states require that if you offer a partnership program, it has to be the exact same price as a policy that doesn't have those requirements. So yeah, it's a great thing.
So we talk about different clients and different net worths. What do you think someone should have in terms of a net worth or savings or income in order to want to buy long-term care insurance?
Well, let me say this. I'd say that half of the country, at least, should not buy long-term care insurance. Okay, most people could easily qualify for Medicaid long-term care services because most people don't have a lot of savings. The median net worth for a retiree is about $250,000. Okay, and if somebody's got less than $250,000 in savings, including their home equity, they probably don't need long-term care insurance. They probably shouldn't. They might, they could buy a cheap policy, a small policy that might not be too expensive, but they're pretty close to being able to qualify for Medicaid anyway. So if somebody's got more than $250,000 worth of assets, that's when they should start to look into it. And I don't think there's no too much money, in my opinion. I mean, even somebody with $3 or $4 million worth of net worth can benefit significantly from a long-term care policy.
Well, thanks, Scott, for sharing the LTC Partnership Strategy with us, and we look forward to working with you on the future episodes.
Great, thanks.
Hi, this is Mark Lichtman here at National Guardian Life's home headquarters in Madison, Wisconsin. We're strategizing long-term care planning solutions, all kinds of great ideas. We have Knut Olson, NGL CEO at the table here. We have Patrick Juarez, head of the Supplemental Markets Division.
Growth Markets Division.
Growth Markets Division. Jim Glickman, President and CEO of Life Care and President of the Society of Actuaries. So a lot of talent here trying to build new long-term care solutions. Take care, everyone.